The precious metals rally continues. Gold is now at $5,600, silver at $120, and Bitcoin just doesn't care at all. The Fed is keeping its interest rates unchanged, and Trump continues to apply pressure. And with that, welcome to a new crypto update video. Yeah, I'm honestly running out of words when every morning, as soon as you get up, you see another extreme pump in the gold price. So just to get this out of the way, $5,600. I'm happy for everyone who's invested in gold, but I believe the higher gold rises, the bigger the fundamental crash will be. I don't have a good feeling about this. Let's just take a look at what's new out there. Of course, also with the altcoins, with Bitcoin, and with the stock markets, because the earnings from Tesla and Microsoft, and who else was up? I forgot. It was really, really good yesterday in any case. They really smashed it. Microsoft had a little dip after hours, but everything is still within the normal range. We'll take a calm look at all of this, and a quick reminder, tonight at 7 p.m., it's live stream time again on YouTube, Twitch, and Kick. If you're interested, feel free to join in. I'll send you the link later in the Telegram group, but otherwise just check out the channel at 7 p.m. Before we get started, please give the video a like and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram talk and signal group. If you want updates, news, and signals, you're welcome to join. You can find the free link for that below in the video description. And if you're still looking for an exchange where you can trade all of this, feel free to sign up with my partner exchange, WEEX. At the moment, there are bonuses of up to 11,500 USDT. By doing so, you support me, or rather, the channel. All right, I think that's it from my side. Let's jump into the analysis. 88,160 at Bitcoin, little change. So yesterday, once again, we had a little pump upwards towards 90,500 US dollars. Okay, once again, liquidity was taken at the top and that was it. We can see if we take a quick look at the order flow, or rather the spot order book. Now recently a little bit has come in again, but it's still very, very little. If we compare that to yesterday, I sent updates to the Telegram group several times. We had 60 to 80 million in outflows when we briefly hit 90,500 US dollars in Bitcoin. And immediately again, even as we dropped down, there was little spot demand coming in. Now, for the first time here, we're seeing a bit of demand down here again at around 87,700 US dollars. But that's still very, very little. So you can already tell the spot demand for Bitcoin is currently rather restrained. And at the same time, if we also look at the funding rates, we can see that they're still very much in the green. Just last night alone, we had another 150 million and liquidations within a very short time. That says it all. If we then take a look at the heat maps, it's the same story. 90,700. Hey, we were just there. Or let's say yesterday. And then again, 86,000, where most of the liquidity currently lies. Nothing has changed there. But what is currently driving the market? Quite clearly, traders highlight the risk for Japan going solo on yen intervention. That was a bit of a bigger surprise for me yesterday. I don't know who in the group noticed it. Traders are questioning how effective Japan could be if it were to intervene alone to support the yen after us. Treasury Secretary Scott Bassett cast doubt on the prospect of coordinated action. That means Bassett made a statement yesterday. It was actually relatively clear, or rather, it was said to be clear that the Fed would intervene in Japan. Japan, or rather the Fed, buys yen, and as a result, the dollar is dumped. That was basically the state of things, and in the end, there was actually good evidence for it, in quotation marks. So things improved, but yesterday he said, no, we haven't done anything at all, and we're not going to do anything there yet either. Somehow strange statements after the dollar was dumped by 4%, and the day before Trump said, okay, no, the yen is actually just fine and all that. Something is really not working here smoothly, in my opinion. Either person A doesn't know what person B is doing, or it's just a huge game because it's not working like this at the moment. Especially now, as I said, the Fed has also announced that, yes, it will keep the interest rates, that is the interest rates the same for now, and probably until June as well, from what it sounded like. To sum it up briefly, Powell, let me see, where is it? Here it is. To sum it up, Fed halts rates. Fed says inflation remains somewhat elevated. 2 Fed governors dissent in favor of a 25 basis point cut. Unemployment rates have shown some signs of stabilization. That's what I keep telling you. That in the end, all the unemployment figures don't really indicate a clear trend. And that's the big problem. If we were seeing a downturn, okay, great, rate cuts. But since the numbers are up here one moment and down there the next, it makes absolutely no sense for Powell or the entire Fed to cut anything. Fed reiterates goal of achieving 2% long-term inflation. We're still far from that. Powell said it's currently at 3%. Uncertainty about the economic outlook remains elevated. So in the end, things are still a bit too divided. He says, that's not important. What was more important was what BlackRock said yesterday. Bonds are no longer a safe hedge, says BlackRock. That's quite a blow. BlackRock says bonds no longer offer reliable portfolio protection amid rising volatility. And in the end, we're not just talking about Japan, where government bonds are already slowly but surely starting to rise again. Honestly, that's not a good sign. If they keep rising, we're going to have a big, serious problem. And of course, that also explains why gold keeps going up when Japanese bonds rise. But not just those, US government bonds have also risen again in the last few hours, or rather in the last few days. Things are really heating up there. Apparently, there's a bit of a shift happening in the financial system right now, as all commodities, all raw materials, all precious metals, and last but not least oil, have surged dramatically in the past few weeks. In my opinion, something seems to be seriously off at the moment, which of course explains the whole gold move. Because if you remember, I told you yesterday, if Powell doesn't cut interest rates, and there are some indications that we will not be getting any interest rate cuts in the coming months either, which is basically what he said. He was pretty hawkish, I would say. Then we have got a big problem. Because if gold jumps $300 or $400 overnight while interest rates stay the same, then the problem lies somewhere completely different. And this could end up much, much worse for Bitcoin as well. And don't let anyone tell you that all the precious metals are being sold off now and everyone is moving into altcoins or Bitcoin. Stop with that nonsense, seriously. Absolute nonsense. Bitcoin is exactly where it belongs. And actually, it should be even lower before we can see anything bullish here at all. Could happen. We've been rejected again at the 200 SMA. The funding rates are high. There are constant liquidations. We only have a small mini range. Liquidity is currently down below and nothing has changed about that. In the short term, I simply remain bearish as far as all this is concerned. The same thing is happening with the altcoins, of course. Ethereum at $2,950. At the moment, nothing is happening, really nothing. It could form some kind of inverse head and shoulders here, but to be honest, that's a bit too little for me. Solana, if we break above, it fails again, no higher high again, liquidity gets swept to the upside again. Just like everyone else at the moment. Altcoin pumps, brings hope, consolidates a bit. Hey, cool, a new higher high, which we didn't reach at all. YouTube goes crazy. And then the whole slump heads back down again. That's just how the market works right now. And where is all the liquidity being pulled into? Into the gold market. And that's just, like I said before, that's not normal. $5,600 per ounce for gold. You can't tell me that's normal or that it contributes to any kind of normal conditions. Something's brewing, nobody knows what yet. We'll only find out when something happens. Then we'll know why gold shot up so much. But the way gold is rising right now, in my opinion, is pure uncertainty about something big that could be coming, and it has nothing to do with interest rates or anything like that. And these are not normal movements in gold. This thing can just keep running and running and running. And that's why, as I say every day, stop shorting silver and gold. Please. It doesn't make any sense. Yesterday we were at around 106 or so, now we're at 120. Don't burn yourselves on any silver positions just because this thing is going parabolic. Just because something is parabolic doesn't mean it has to fall. You might be able to say that about some shitcoins, but not about assets where the entire financial world is currently in the market. Sure, the earnings are good. Speaking of earnings, if we take a quick look, what was it? Meta was still there. Microsoft actually matched the earnings completely. It was really, really good. And yet it just slumps all the way down. Then we also had Meta's earnings, which were really, really good after the last earnings, which were disappointing. So far, only the inefficiency up here has been filled down to the exact dollar. Let's see how sustainable that is. The markets are so restless right now. We're seeing the Nasdaq, by the way, before I get into stocks a bit more, USD JPY is still at a very, very low level. We like it. Dollar slumping, awesome. Gold and silver to the moon. When I see the Nasdaq heading toward an all-time high, but the stocks that usually drive the Nasdaq, and you know what I'm talking about, Google, okay, close to the all-time high, Amazon. In no man's land, in my opinion. Come on, load. Oh, come on. Now trading fuel is acting up too. I think I'm getting too worked up. I think that's the problem. That I get too worked up. Anyway, what I want to show you with this, maybe it'll work now. So Amazon, Perfect. Amazon in no man's land, huge sideways range. Apple in no man's land, huge sideways range. So what other big players do we have? Right, I just showed you Meta, but it's still miles away from its all-time high, that is. Microsoft also miles away from its all-time high. Where do we have Nvidia? Here, $191, also miles away from its all-time high. Nasdaq is at an all-time high, and the stocks, the Magnificent Seven, the ones that are supposed to drive it, are stuck in no man's land. Something doesn't add up. And then if we look at the volume is simply down in the Nasdaq. Okay, all-time high and down. S&P 500, where do we have a proper chart here? All-time high and yeah, a bit more volume than yesterday, but so you know what I'm getting at. These just aren't solid signs that the market is standing on a solid foundation, while gold and silver are gaining more percentage points every day than any fucking meme coins. That's what's weighing on me a bit at the moment. And at the same time, the volatility index is slowly but surely starting to climb again. Not good, in my opinion. By the way, the DAX has probably now completed its B wave up here, textbook style, actually perfect, and now it's heading down. Let's see how things develop from here. In any case, I'm still positioned short. That doesn't change even if gold and silver keep pumping. Please don't let anyone tell you the fairy tale that all gold and silver investors are now investing in crypto. That's the biggest nonsense I've ever heard. We'll catch up again this evening at 7 p.m. for the live stream. I'm looking forward to it, and I'll dig up a few more things that could be interesting for you as well. Otherwise, I'd say leave a like, subscribe, and join the Telegram group. We'll talk again this evening. Thanks for listening. Until then, bye, and as always, stay crypto.